Let's go live to Ed Boyd now, our business reporter. Ed, what do we expect to happen at 2 o'clock this afternoon?
Laura, 2:30 this afternoon, the RBA board will make their cash rate announcement, and the expectation is they're going to lift interest rates by 15 basis points. That would bring Australia's cash rate off its record low of 0.1% up to 0.25%. So that would be the first interest rate hike since November 2010, so more than 11 years ago. Remember, the cash rate has been on hold at this record low since December 2020, so it's been on hold for quite some time. But the cash rate, it's expected to go up 15 basis points today, and then the rate hikes are expected to continue throughout the rest of this year. We've got a chart I can show you showing the big four bank economists what their predictions are for the number of rate hikes Aussie homeowners can expect. And you can see Westpac expects 7 rate rises this year along with ANZ Bank. That would bring the cash rate to 1.5% by December. The other two banks expect just a few less rate hikes, but whatever way you look at it, the interest rates are going up, and they're going up sharply. Also got a chart I can show you just showing the story the cash rate has been on since the GFC. You can see around the end of 2008, the cash rate was at that 6% level. It slowly ticked down a little bit, moved its way back up to 5% around November 2010. It was 4.75% in November 2010 was the last time the cash rate was raised. Since then, it has been on its way down, and it has been at record lows now since December 2020. But Laura, I think there's a very, very good chance the cash rate is going to be going up today. And if it doesn't go up today, it will be going up in a month's time as soon as the federal election is completed.
Look, there's still a few economists holding out, think that the RBA might still hold off until June, I guess, to see the wage inflation numbers as well. But even so, you've just taken us through it. We're going to see rate rises sooner rather than later, and they're going to happen frequently. That's the long and the short of it.
That is the long and the short of it, Laura. Look, there are a few economists that do think the RBA will wait another month. That's because the wage price index comes out on the 18th of May, so not for a few more weeks. The Reserve Bank's previously said they'd like to see the inflation numbers. We know inflation is incredibly high, 5.1% headline, 3.7% underlying inflation. RBA said they also want to see the wage price data before making a cash rate call. We'll have to wait and see this afternoon to see whether they do that or not. I believe they're just going to go ahead and raise the interest rates without the wage price information. So I expect the cash rate's going to go up today.
Yeah, what happens to repayments as well? The average mortgage about $500,000 in Australia?
Average mortgage at the moment is roughly $500,000. That's according to Rate City. We've got a chart we can put up on the screen for you, just showing the impact of rate hikes on that mortgage monthly repayment. So, for example, if the cash rate goes to 0.25% today, which it's likely to do, that's an extra $39 per month for the average mortgage repayment. However, we know the cash rate's going to continue rising throughout the year, and on that chart you can see just how much more expensive it's going to get for the average Australian. 1.5% cash rate, that's about $378 extra per month that people will be spending on their mortgage. The idea, of course, by raising the cash rate is to reduce the amount of spending in the economy. People will prioritise spending money on their mortgage over other items. In theory, that does reduce inflation, which is what the Reserve Bank wants to do in the economy, because it is definitely too high right now.
Ed, you've got a big day. We can't wait to see this decision. It's going to affect most of our lives this afternoon.
Definitely.
We'll see you then.